Okay, so today we're taking a look at the relative strength index, and we're just going to be building on the same process that we've been using for the last 4 episodes now. So to do this, we're just going to take a peek at our old MACD code and paste in the same libraries in Python that we're going to need. Run this and set up my kernel for Jupyter Notebook. And the global variables we're using are going to be a bit different because this indicator doesn't use the same it doesn't function quite the same way. So to build the relative strength index, we need to first calculate the period. We need to first calculate the period we want the relative strength index to be over. By default, it is 14. So we're going to do RSI length is 14. And we're going to define our overbought at 70 and oversold at 30. Now, the way the relative strength index works is it oscillates between values of 0 and 100. When it reaches a value above 70, that means that prices have been overbought and they should come down soon. And when it reaches a value below 30, that means they've been oversold and they should come up soon. So we use these to enter and exit trades, or use them in confluence with other indicators to suggest a shift in momentum. So those are our global variables. Let's now paste in our data acquisition function. It's the same as always. Get the data, make sure the look back period is what we want. And just to start off, while we're loading in a little bit of data, we're going to keep it at 100. So let's run all this to make sure it's all check marked. Good. So instead of adding the MACD indicator, today we're going to be adding the relative strength index. So define add RSI to the data frame. Get rid of that. Whoa. Jeez. And delete this. Return data frame. So to start out, we need to first define the delta. Delta is pretty much just the change in prices from one day to the next. So we can call delta price change equals df close dot diff. This is a built-in pandas function that shows you the difference between each given row. And so now we have a long list of numbers that are going to be just the difference between the close price before and the close price after. From there, we can actually print this out. So I'll show you what the diff looks like. Print price change. And I'm also going to do print close. df close head. It's going to do the first 5, and then this is going to be the first 5. I think this should work. So def main. So let's define a main function to run our 2 functions really quick. I edited the RSI to show you guys what the diff does. So get data and add RSI. Great. df equals page down, turn the data frame. And when we run, let's move this all back. So when we run the main function, what I should see is the first 5 close prices and the first 5 price changes. Let's see how that goes. So you can see that on the 4th of December 2024, prices went from 600 to 603. So the change was $3.72 and so on. So we have the list of price changes denoted to start out here. We can get rid of this. That was mostly just to what is known as debug, or show you what's going on in the middle of your function. From there, we need to separate the gains and losses. So when price changes are positive, we need to group those, and when price changes are negative, we need to group those in a separate list. So we're going to do gain is equal to, or I'm going to denote that with a little note. Gain is equal to price change, and we're going to use the numpy.where function as we always do. Delta is, or price change, is greater than 0, then that is going to be 0. And otherwise it's going to be 0 if it's not greater than 0, and loss is going to be price change dot where price change is less than 0. Otherwise we'll just leave that as 0. Awesome. And now we need to calculate the average of these two. Average gain versus loss. So the average gain is equal to gain dot rolling, and if you remember from our previous episodes, rolling just takes a moving average of any particular list of numbers or values that we give it, rolling, and then the window is what we use in rolling function. So window equals, and we already have it globally defined as RSI length. So length equals RSI length. Great. Window is going to equal length. Awesome. And take the mean. All right, and the average loss is going to be really similar. So it's loss dot rolling window equals length dot mean equals, and then from there we have to calculate the relative strength. So what percentage of each other have the gains and losses been? And here's how we define this. So the relative strength, or just RS, is simply the average gain divided by average loss. So what percentage of the average loss is the average gain? And to standardize this, to keep it between 100 and 0, we need to do a standardization function. So the relative strength index equals, it's 100 minus, and then this is the function for it. Here you can see the formula that I'm following. 100 divided by, then 1 plus the relative strength. Great. So let's add a note here to denote that. Calculate RSI. And that is the whole function. And we can tailor how far back we want to look, but for purposes of this episode, I'm just going to keep that at default. And beneath it, we will like to make a column for our data frame that is the RSI. So data frame RSI is equal to RSI. Very easy. And then just return the data frame. And when we run this, instead of seeing the difference in close prices, we now should see just this column that we have modified the data frame with. Let's run it and see how it goes. Great. So we get some NANs at the beginning, or not a number, because it takes 14 periods to calculate the relative strength index effectively. So let's get rid of that. Let's do return df.drop NA, which just gets rid of every row where a NAN exists. Can be dangerous, but in this case it is not. Nice. But there is an issue I am seeing already. Relative strength index is way above anything I was expecting to see. So what have I done wrong? Super important. I forgot to make sure that the losses were negative. So what I'm doing here is making the gains and losses both instances where price changes are above 0. And the losses, the issue is they are just always zero because there's never an instance where price changes were lower than zero but also positive. So I need to make sure that negative price changes exist. It is this one small error I made where I didn't include the negative sign here. I need to make sure that I am taking negative price changes for losses. So that makes sense. So now we're going to be factoring in loss to our relative strength index, and that should balance out our results quite a bit. Much better. Now you can see that the range we get is between 0 and 100. Perfect. Let's plot this. So just to add a little plot at the bottom, plt.plot, data frame, RSI. Let's just make df equals main. And if we plot the relative strength index, great. And we can also plot some horizontal lines to denote our overbought and oversold levels. So plt dot ax h line, I think. Yep. Plot ax h line, and we'll make that our overbought. And we're going to do another one, pl oversold. And we're going to do color or call equals red for color. We'll do green for oversold. And here call equals red. I think that works. Do I need to do color? Color. Yeah. Awesome. So now we have a pretty good chart. Let's make this go further back so we can see a bit more. Let's do 1,000 days instead of 100. All right, so that's more or less what the relative strength index looks like. And so every time prices cross below this green line, we're going to be taking a long position. And every time prices cross below this red line, we're going to be taking a short position. And I want to add this to our relative strength index plot or function. So let's put this in here. Can I do that? Yes, I can. Should be good. So plot relative strength index. All right. So now we have our data and our function. We're going to move on to defining our strategy. So, and we need to do overbought equals overbought, oversold equals oversold. Great. And we're going to return the data frame at the end with some modifications with a strategy column. So same thing as always, we use np.where for this. We're going to start off with data frame strategy equals 0. And from there, we're going to start modifying it. Data frame strategy equals np.where data frame RSI is greater than overbought. That equals 1. Otherwise, it equals np.where. We're going to add another line here. Otherwise, it equals np.where and this is a bit complicated, but we can do it. Let's np.where df RSI is less than oversold. We get a -1. Otherwise, it's just 0. So where the relative strength index is not overbought, it is going to be, depending on what the value is, a -1 or a 0 based on whether or not it is overbought or oversold. So Overbought, if it is above the overbought level, will be denoted as a -1. Whoops. And oversold is going to be a 1 when it is less than the oversold threshold that we define in the function. And then we're going to shift that back once. So df strategy dot shift 1. So this makes sure that we don't place a trade before the signal occurs. So shift back to make sure we have seen the signal. Great. So now we should have a strategy column in our data frame when we add this to the main function. Add, let's make this add strategy for consistency. Add strategy. Add strategy. The data frame. And the overbought and oversold are predefined, so we don't need to add those into the main function. So we have a good plot, and we have strategy, usually zeros, and we can check the strategy column values to make sure we have ones and zeros. So df strategy dot, and this is a pandas function, value counts. Awesome. So there are 191 instances where we will be short and 68 instances where we will be long. Are 68 days or 191 days, because these are daily, this is daily price data. Great. So let's take a look at this. Let's test the strategy out. And this is a really simple introductory strategy, and if you've been following along, you already know that this is probably not a good idea or something you're going to want to follow. But we're going to take a look at how it is to only buy when you're below oversold levels and only sell when you're above overbought. So you don't want to have any positions when you're in this middle range. This is just going to be no man's land. So with that, let's start defining the strategy. Or let's start testing the strategy. Define test strategy. The data frame. So I'm going to take code from our old function the same way, okay? So asset returns are going to be multiplying the cumulative returns of the asset by nothing, and the strategy returns are going to be multiplying the cumulative returns of the asset by our strategy column. Very simple. This is why I like defining 1, -1, and 0 before we move on to testing any strategies. It just makes the multiplication process of testing the strategy very easy. And we're going to return the data frame. We're going to add the test strategy to the data frame and see if that runs smoothly, and it should. Great. So because we're not holding for the beginning of this period, we don't have any positions. So our returns for the strategy are negative, or our returns for the strategy are 0, while the S&P starts compounding immediately. And let's see if that makes sense here. Yep, you can see that it starts off between 70 and the overbought threshold. So we have no position here, just like it would suggest in our strategy column, and we get no returns. Awesome. So what if we did tail? Dataframe.tail to see what our final returns would be over 1,000 days of using this strategy. Okay, so not actually super bad. We made 30%, 27.1% following the strategy, while the S&P made 40% in the same amount of time. Let's plot this. So I want to plot plt.plot data frame asset returns, and then plt plot df strategy returns, and plt dot plot legend. That's going to be a list of ticker and strategy cumulative. cool. This is a cool looking chart. You can see, I forgot to make this an F string. Great, SPY cumulative. So RSI pretty much keeps up, and it actually outperforms for a little bit. I bet that throughout this whole period, if you happen to backtest the RSI from here to here, you would think you found the holy grail. And that's a lot of backtesting too. That's about 400 days of just backtesting, and you would think that, awesome, you have finally figured it out. The relative strength index is the way to go. But as we know, what we do in this channel is we move it way back out. So let's make a title here before I show you guys strategy. Okay. And we're going to move it all the way back out, way up to 10,000 days of testing. Same amount of effort, different number. So that's all the values we have. We're going to be short up here. We're going to be long down here. We're going to be in cash in the middle. What's it look like? Not good, but not terrible either. It is upwards. So this might be useful for diving in further in a later episode of how this can work in harmony with another indicator. For now, on a standalone basis, we can prove with some pretty strong confidence that it doesn't really work. What you would want to see is every time you place a trade, you win, but that's just not what happens. It doesn't actually know when stocks are overbought or oversold or when you should be cash, because it's a technical indicator, and it's just mostly a coincidental result of what share prices happen to do. So let's add this to our relative strength index our test strategy function. So every time we test, we get a plot. Tab, little note, plot, strategy, turns. Great. And that is our full code for building the relative strength index. It's a bit longer, and it's going to get a bit longer every time. And plt.figure to make a new plot for this second one in the same cell. Great. So now you have full authority to test the relative strength index and the moving average convergence divergence, moving average crossovers, and moving averages at your will. And you can test 30 years at a time using one command, which is much more powerful than any strategy you might have been testing manually. It's pretty obvious that what we're doing right now is pretty simple, but what we're capable of doing with these simple indicators is infinitely superior to the simplicity that you would be limited to if you did not have code as a tool. So congratulations, you are now much more equipped to continue competing in the trading space with Python. So as always, stay sharp. In the next episode, we're going to be building the money flow index. So you'll have three technical indicators under your belt. Until then, make sure you are not listening to anybody who tells you that this is an easy game. And as always, stay sharp.